All right, so welcome to Breakthrough, where we talk about business strategy, execution, and results. And we do it on a lot of topics, mostly that are kind of geared to what's happening in the news and a little bit about what's happening in the economy. And today we are going to be talking about both in the way of both news and economy and some things that have been hitting the market. So if you have not already checked out paulbarrongroup.com, make sure and go to it because it is where you can get some free consulting and advice for your business. We do a ton of things on the digital front, but we also do advisory roles and some other cool things right over there. So check out PBG and we'll catch you soon over there. Let's go into a little bit about today's episode and really what I think is going to be one of the biggest things that is going to hit our economy overall. And these are some of those those early indicators, but it is my analysis of the gig economy is dying. And the reason being, there are a few indicators here that kind of flow into this. And if you look at this slide right here on the signs of a downturn, there are some things that start to really play into it. And the first thing that plays into a downturn in many cases is going to be luxury items. You'll hear this from economists around the world that once you start to see luxury items start to take a dive, you will start to see some potential impacts on the economy. So if you take a look here at this chart, this gives you an example on luxury fashion, which includes leather goods, eyewear, watches and jewelry, and then also cosmetics and fragrances. These are all luxury items, and this goes all the way back to 2013. So back after we've been healthily into our, the rebound from the 2007 recession, and you can kind of see all we've seen is kind of up and down numbers in this chart until 2019, which is where I think the big number starts to flare out, and that's when things start really flatlining and starting to slow incrementally. Though we are not seeing a huge dip, it is a pretty good dip over the past 3 years. So this is something that I do believe is going to have a factor. And some other things that start to play into this when you look beyond the luxury aspect, and that is transactions. And this is where the gig economy starts to play into the analysis. When you look at Uber, Grubhub, all the on-demand delivery systems that are out there, that is basically a gig economy supported product, both from the way it's operated, being Uber and even Grubhub for those delivery drivers, but also in the way that consumers interact with it, because it is somewhat commoditized. And in fact, Grubhub actually made that statement here recently, and I'll talk a little bit about that. But if you look at these transactions since 2016, we're looking at two different transactions here. The restaurant transactions, which are just in-restaurant transactions, slowing, that's the dark green, slowing from 2016 at 2.3% previous year growth to 1.7 in 2017 to just 0.3% of growth in 2018, and now negative growth in 2019 in terms of total transactions. We do see that continuing to grow in the negative area, almost 2%, which would be a significant downturn in the restaurant business. If you look at this, that's almost a 5% yield difference between 2016 and 2020. So in 4 years, when you look at the very slim margins, that's a big factor in the restaurant business. The other thing you see here on this chart is the on-demand transactions. Now, on-demand is going back to the Grubhub, Uber, etc. And this one swings wildly in a different way. So way up in 2016, I think everybody kind of fell in love with on-demand delivery at that time, started to slow a little bit, but then took a nice little market bump right after that. And then here comes 2019, huge drop in the on-demand services, and it's showing in the reports that we're seeing in terms of the earnings. And we see this to continue a negative downturn and spiral for the on-demand, mainly, as I said, because all of this, I believe, is now a commoditized service. And once you get into something that's a commoditized service, you are definitely going to see the market start taking a hit. Now, I'm trying to put a puzzle piece together for you here. So I've got a clip that talks about kind of how Trump is supporting the economy. So what I think is happening is we actually are seeing an economic downturn occur, but the markets just have not caught up yet. So here is Nobel Prize winning economist Robert Shiller, who talks about why he thinks this is going on. Check this clip out.
A little bit of a recession scare, or maybe an intense recession scare in around August, people looking at the yield curve, people looking at global growth and tariffs, and bracing for something like the end of this expansion. What makes you feel perhaps that's very premature, that we might have years to go?
Well, yeah, this inverted yield curve scare looked frightening at first, but nothing dramatic has happened, so I think maybe we're still in the Trump era. And I think that Donald Trump has, by inspiration, had an effect on the market, not just tax cutting. The big uncertainty, of course, is these impeachment hearings. And if he survives that, he might contribute for some time in boosting the market.
So if he survives this impeachment inquiry, if nothing really comes of that to jeopardize his place in office, do you assume perhaps that he'll get reelected? And then what does that mean, I guess, economically and just in terms of perhaps the public view of the economic outlook?
Well, re-elections are substantially he's helped along that he's already served one term. This is his chance for a second term. And if the economy is strong, which is what he built his case on, make America great again, he has a good chance of getting re-elected. But it's an incredibly uncertain time right now. We haven't seen such uncertainty in a long time, and where it's polarizing society as much as it is now.
That being the case, I guess, what about, you said it's not just tax cutting or perhaps deregulation. Is there something else that you think is going on in the economy, the nature of, I guess, this particular phase of growth that you think means that it could persist under Trump?
Well, the thing that is interesting is consumption expenditure. So consumption as a fraction of GDP hasn't gone down much from the recession. So the consumers are hanging in there. You might wonder why would that be at this time, so late into the cycle, which is, it's the longest expansion ever. Now, you could say the expansion was partly Obama, but lingering on this long needs an explanation. And I think that has to do with the inspiration for many people provided by our motivational speaker president.
All right, so what you see there in that clip is a Nobel Prize economist basically looking at potentially a propped up economy. And where I think we're seeing some potential signs are on things like what you see right here. And that is the whole issue around this gig economy, because gig economy supports a ton of work, especially in today's online world. Look at this hit that we just recently took with WeWork. WeWork, of course, is the company that does the co-working space. They do a ton of business. They've been a company that tried to go out as an IPO. It had a miserable failure. And now SoftBank, who is the company that essentially is the company trying to save their investment, is having to bail this company out after basically their CEO took this company or attempted to take this company public. So it's possible that WeWork could literally, as you see another note here with Bill Ackerman, who's the activist investor, that this could actually go to zero. That would be one of the biggest historical fails in the gig economy that we've ever experienced since the gig economy started. So this is a big deal. I think it's one of the key dominoes that potentially is causing the entire market to falter. Next up, you see right here is the whole idea around food delivery, and that's really what this is about. When you look at food delivery, there are some key things here that you have to understand. One, the model is never and will never work for operators. The cost is too high, the risks are high, branding is discharged. You're losing all the cost versus benefits. The control of the data comes into play. The cost of the system itself on the Uber or Grubhub side is very difficult because it's an expensive proposition to run that, as you can see with Uber's revenue numbers really starting to move. And Uber literally is making a move now into another type of business, which is, won't talk about that a lot, but if you haven't had a chance, you should check out some of the stuff on what Uber's trying to do with Uber payments. Additionally, what you see here are some of the things that Goldman Sachs did, and that is that they took down Uber's #1 competitor, 40% plunge. This happened this week, and that's a 40% market hit to Grubhub. And that was after their earnings came in at well under what they anticipated. But the biggest issue with Grubhub was that they had even admitted to their shareholders that this was a business that was now commoditized. So when you have a major company like Grubhub actually admitting to this and going on record with these kind of challenges that they're dealing with in the business environment today, I think we've got, along with what we've seen with WeWork, we've got a gig economy that is really starting to take a hit. Now, let's talk a little about, so why is the gig economy dying? First, the WeWork fail, pretty straight, slowing revenue growth at Uber, and then also Grubhub, obviously, with their slowing transaction. But here's what you can look forward to in 2020, and these are the things I think that will kind of help out to a certain extent, but I do believe that we are going to start to see some real significant market shifts. Now, again, back to what Schiller said, is that this may still be propped up by our political scenarios that we're dealing with, since 2020 is an election year. But increased home and grocery transactions, I think we're going to see that happen in 2020 because we're seeing the falling transactions on the on-demand delivery and in restaurants. So if that's falling, where are people eating? They're eating at home, and they're starting to spend more time and more transactions in the grocery aisles. The other thing is that mobile streaming and penetration is up. This goes back to this whole on-demand thing, meaning people aren't going out as much. So the idea of what we used to see as entertainment, now we're seeing a lot more of that in the home. The other thing is ghost kitchens growth, I think, will occur in 2020. This, again, will be more of a centralized approach toward delivery, but I think it will be a different model in which we've seen in the past of on-demand delivery coming from a lot of different restaurants. When you centralize that into a ghost kitchen, if you don't know what a ghost kitchen is, basically it's like a commissary, one system or one operation that might have 10, 15, almost like a food hall, but with no branding or your ability to eat in. So it's all delivery, but it's all centralized. So that itself changes the game a lot. And of course, that would really be something if Uber or Grubhub started to get into ghost kitchens, which, back to a clip here of where I'm actually talking about that. So let's go to that clip. So Uber Eats continues to focus on food. I think that's very evident when you look at their recent IPO, a little bit lackluster. They're struggling. Obviously, it's a company that's never made money, and I think they're trying to grab a few headlines, interest on their recent IPO valuation, but I still think it's a Trojan horse for the restaurant industry and their eventual foray into the food service as an operator. And what I mean by that, and I've talked about this many times here on this show, is that I believe that Uber is basically harvesting all this customer data from all these operators, and they have a natural play, and that is to begin to become a food service operation. Now, there is some technical issues there, but it's definitely no more technical than trying to launch a fleet of drones worldwide. So I think if it's a company that could do it, Uber is probably one of those that will. All right, so what I was saying there in that clip is essentially Uber and the likes of Grubhub are going to have to shift their business model, and their business model is going to have to get more effective on being able to do delivery. And the only way to do that is to actually get into the food business if they choose to stay in that business in the first place. This could still be a scenario where Uber Eats dumps it like Amazon did this year with Amazon restaurants. This is not out of the possibility, but it's also a potential that Uber could be playing coy here and looking at some sort of strategy that eventually could put them into the driver's seat with all this customer data and dining habits that could really play into basically the ghost kitchen or centralized delivery mechanisms that would reduce their costs, reduce their operations, and get them into a profitability, especially around food. Because you're picking up from the aspect of the transaction. You're not sharing any longer. Your transaction cost to the customer is going to be lower. Your cost and profitability on the actual product is there now. So you're getting from all parts of the pie, and that could be a major issue with that. Now, what I think this will do is we'll see less gig business, but we will also see more small startups. And I think that's where the saving grace is for our economy and what could be happening in 2020 and beyond. And that is that the gig business is probably going to start going away. We're going to see less and less Uber drivers. We're going to see less and less food delivery, mainly because these companies just don't have a business model that is designed for long-term growth. However, startup businesses could be the angle in which could sustain our economy maybe through the next 4 or 5 years. And that will be something yet to see, because that is kind of that necessity of what the market environment is going to be pressuring potential startup entrepreneurs and things of that nature. We're going to get into some strategies here in a moment, but if you are looking for strategy and execution ideas for your business, make sure and hit me up at paulbarrongroup.com. And we will be right back with 3 tips on how you can start your own business. Has your business hit a wall? Is your competition eating your lunch? I've been building breakthrough brands for over 20 years with experience right from the trenches. We deliver strategy, execution, and follow-through results in branding, technology, operations, marketing, and leadership. Become the breakthrough brand you should be. Contact me now at paulbarrongroup.com. Welcome back to Breakthrough, and today we're talking about starting your first company. We've talked about it before, that the market may be slowing, the gig economy may be slowing. So what do? How do you get to that next game? How do you start rolling in a foreign? I'm telling you, this is how you're going to do it. You're going to do it by starting your first company. Now, there's a few things that you have to do to start your first company. You can't just go out there and say, hey, dude, I'm a CEO, right? No, you've got to have a strategy, and the strategy is going to be right here. It's going to be building on what you know. It's going to be talking about get ready with the money, and also recon your competition. These are the things you have to do before you get rolling in your first business. All right, so build on what you know. Let's talk about that. Building on what you know, if you're a gig economy beneficiary right now, maybe you're out doing Uber, or maybe you've got a startup restaurant and you're doing some other things on the side, you've got to be able to jump to that next thing that is going to make a huge difference in how you move forward if there is a major hit on our economic condition. And one, you got to be very passionate about what you are doing. That has got to be the case, because if you don't have that passion, you're not going to be able to stick it out when times get a little bit rough. Be prepared to fail. This is another factor that I think a lot of people don't realize, is that sometimes things aren't just going to work. You've got to be able to fail fast and understand and really kind of learn from these failings of what did and did not work in your potential business. Don't go it alone. And this can be a lot of different things. It could be a partner. It could be an advisor. Maybe you've got a group of people that can assist you in kind of getting your startup going. But the main thing is you cannot be a solo guy out there trying to pull it off on your own. And the other thing is you're going to have to build some traction. And building traction can be simple things like, not necessarily getting that first customer, because in some cases you've got to do a lot of groundwork before that first customer actually comes in. So you've got to be able to build traction. And in many cases, that might mean working for free. Yes, working for free and doing things to help kind of get your business up to the next level. So some other things you'll need to do, and this is just some kind of a line list for you here. You need to write your business plan out, and I think a lot of people kind of get a misnomer here of what a business plan is and a business strategy. It's something that essentially you've got to kind of outline what it is your business is going to do, how you're going to achieve it, almost like a SWOT analysis if you've ever done one of those. It's something that is really going to help you in understanding of how you can move that business to the next level of actually making money on it. The other thing you're going to have to do here is know your competition. Knowing your competition is a very important thing, because if you have heavy competition in a market space, you may not have the perfect product market fit, and I'll talk a little bit about that in a second. But it is important, and in some cases you might need to bring in a pro, an attorney, advisor, a finance guy, someone that can help you understand whether or not the competition is formidable enough for you to take a step out in that direction, and then get the money lined up. Remember, we talked about that. Getting your cash lined up, and I'm going to show you some ways that you can get that done on funding your startup. And there's a few ways that this happens out there. Obviously, everyone knows friends and family. There are some things that you are going to need to do if you are looking at taking on investors. So make sure that you create your new startup. You do it the right way with the correct business alignment and structure. And there's two real options of how you can do this today: an LLC or a corporation. An LLC essentially is like a corporation in a sense, but it's a pass-through tax entity that goes to the initial owner or owners. Can be a partnership and still be an LLC. Or a corporation. Now, a corporation is where you are actually an employee of that business and the tax doesn't pass through. You actually have two different tax entities: your personal tax entity and your corporation tax entity. So it depends on what route you're going to take. Now, here's the big step. If you are looking on taking on any major investor, and when I say major investors, let's say up to about $1 million. If you're looking at something like that, it is best that you go the route of a corporation. And there's many reasons why, but the biggest reason is to actually protect your investors. Many investors or accredited investors will not invest in an LLC because of the complexity of the organization. They want a C Corp and they want it done in a place like Delaware. Delaware is the place in the U.S. for incorporating, and there's a lot of reasons for the state of Delaware and why they structure their corporation filings in that state to benefit both investors and owners or founders of corporations. So that, if you have not checked it out, and if you have not done that, should you go kind of the next step, and that is, should I get an attorney or go over to LegalZoom and try something like that for getting my corporation? You can do a corporation on LegalZoom. You can do an LLC on LegalZoom. Price ranges are fairly wide depending on what kind of setup you've got. There's a whole questionnaire that you go through on LegalZoom to get that done. Or you can go to a personalized attorney, which is what I recommend. Those steps are going to pay dividends in the long run, especially if the business is successful. And I'm assuming your business is going to be successful, so do it the right way in terms of setting it up and getting ready to line up your money. Now, let's talk about what and how you could go out and get that money. Let's say you're a restaurant guy. You've been a chef and you're saying, hey, I'm going to run a restaurant. I'm going to start and I'm going to launch one. Listen, this is a multi-million-dollar investment if you're going to open a restaurant business. And a multi-million-dollar investment means that you're going to need some real cash. There are some ways to go about this in what is called a Reg D filing. And now a Reg D is a bit different. It's not like a friends and family, which is something that you can do kind of with structured agreements and things like that. But a Reg D is a much more official document that allows you to go out and raise money up to a certain point. Certain states are different, but like here in Florida, it's like $1 million. And you can do it without having to jump through the hoops of the SEC filing. Now, that is a big deal for being able to raise cash. So that is something that if you have not researched a Reg D, you should take a look at it. Some of the key takeaways: Reg D lets companies do certain private placement raises capital without needing to register with the Securities Exchange Commission. The company or entrepreneur must fill out a Form D disclosure document to the SEC after the securities are sold. And then you can see here, those selling Reg D must also comply with applicable state laws. So there are some things within your state that you have to do. But the big thing is that you can actually raise cash without going through all of the loops and hoops of getting to that $1 million. Now, once you start to flow over a Reg D, all bets are off. Now you're talking about a full-blown fundraise, and that is a different deal because it is an SEC filing. We won't get into that one. There are some links here below that go into a Reg D and how much you should be aware of on how Reg Ds work. But the number one thing I think you should do as a startup, if you are looking at a Reg D, get an attorney and help them walk you through that next step. So there's two differences in Reg Ds. You've got a 506B and a 506C. Basically, it's saying that, on the B side, it's your buddies, it's who you know that you can do this with. On a C side, it's actually anybody that is a accredited investor. Now, this is a huge move that we're starting to see open up in the investment area for starting up business. And I think this is a great thing for startups because now you can go out to an accredited investor, and an accredited investor doesn't really have to be that rich. They just have to have a certain level of income or a certain level of net worth that can get them to the next level. So you have to have a net worth of exceeding 1 million individually or combined with a spouse. You can be an accredited investor, or you've earned income exceeding 200,000 or 300,000 if combined with a spouse. So again, you could go to your dentist, your doctor, your partner, your lawyer, whoever it might be that is in those classifications, and they could be an accredited investor. And this, of course, just changed with a recent change in one of the filings that allowed for startups and companies to actually go out and do this with a Reg D. So this is something that if you are really serious about jumping into your own business, and it's not just going to be a fly-by-night, fill-in-the-blanks deal, but a real deal, then this is one of the best ways to get it going, unless you have bank financing. And bank financing is going to be a different game. I've talked a little bit about bank financing on previous episodes here on Breakthrough and what will be some of the best funding routes that you can take. You've got to check out that episode there because it kind of goes into that as an option. All right, so number 3 tip here on strategy is reconning the competition. This is something that I think you've got to be able to do. Make sure you have a product market fit for what you're doing. Understand what the real problem is, because I think this is where a lot of people kind of get lost on their overall business idea, is they fall in love with the solution, meaning the service or the product, and not with the problem itself. Because if you fall in love with the problem, you're always building a solution to solve the problem. And that's something that I think a lot of startup entrepreneurs really kind of lose their way. So if you look at this chart right here from product market fit to problem solution fit, it kind of shows the difference of how you go to market with this. And this is something that's been out there for a while. You can check this out over on 4Week MBA. It's kind of interesting because I think that when you go to a problem solution fit, it's a much better track of being able, it's exactly what I'm saying right here, is don't fall in love with the solution, fall in love with the problem. So getting that into a scenario is you go to a demo phase, then you sell it, then you build it. So you're really learning as you go rather than building it, then demoing it, and then selling it. Because if you're out demoing it, of course you got to have kind of a minimal viable product. They call that an MVP. You got to have something to start with. But you got to go sell it. And the reason you got to go sell it at its earliest state is so that you can get feedback and understand where you're making mistakes, where things needs to change in your business to be able to move it to that next level, which is building that perfect product to solve the solution that you're trying to fix. So that's something that is a little tricky, but it's definitely something that as you build a new startup business, you've got to go through. Here's the other thing you need to do. Here's a kind of a line list of good topics. One is read this book, Competitive Strategy by Michael Porter. He really goes into the breakdown, and these are some of the things. Know the newbies. So who are the new market entries? Remember, we're in an economy potentially where there's going to be a lot of new startups. And the reason I think there's going to be a lot of new startups is because I think the gig economy is going to start to go away. So these people are going to be looking for things to do, but not necessarily going to work for someone else. So know the newbies, understand where the entries of new market competition is coming from, understand the power of your suppliers and your supply source. Those may be a strategy for you to actually get into business. So it depends on what you're doing, but your suppliers could potentially front you almost in the way of cash through supply, which can generate cash. If you're a restaurant, you have a great supplier that's going to fund you out maybe $100,000 in products for goods and services on food. Now that can be converted into menu items, which then converts out to cash. And that's almost like, in essence, a round of funding for you. So that's one thing you've really got to understand, is how your suppliers can play into this. And then the power of your customers, really understanding where the power of your customers can come from. And this is going to be things like demand. It's also going to be the type of customer and the demographic of customer that you're using or you're trying to reach. And then the subs, the substitutes are going to be the other factor here. Substitutes can really be a hindrance on your business, because here's what happens in a bull market, okay? And it happened, if you look at what was going on with Uber and some of the on-demand delivery stuff, this happened to them. Uber and Grubhub, they go out with these great on-demand services, and what starts happening? All the substitutes started hitting the market and creating a commoditization of what that service was. When that happens, and if that happens in your business, you are toast, because it will take your business down. It's just a matter of time. So that's why reconning the competition and understanding how hard it is for what they call a threshold to entry can be for somebody to jump into what you're trying to do as a business startup. So that is something I think that as you guys are building your first startup, those are the things you've got to look at in terms of just the beginning strategies for building the perfect startup and getting it to where it can stay for a long time. So again, if you are looking to build your own startup, maybe you need a tip, hit me up over at paulbarrongroup.com. I'm happy to help you guys out. Shoot me an email. You can also send it to paul@pbg2.com, and I answer all my emails. If you want to follow me on Twitter, just hit me up at Paul Barron over on Twitter. I also answer DMs over there. So make sure and stay tuned right here. We're going to get into some other things here on Breakthrough. Thanks for listening. Tired of keynote speakers not delivering? My approach to speaking for your event is built on a very unique process that I've spent the past decade crafting and building. With the power of my social data index, I deliver consumer science and behavior on any imaginable domain. When I speak, I set trends based on a unique set of these insights, all customized to your event. The future of business is not data. It's the science of data interpretation that can uncover the vast potential of your business. Contact me now to speak at your next event. Email me, paul@pbg2.com. or reach me on Twitter @PaulBarron. All right, so here on Breakthrough, we do two types of product pitches, we'll call them. One is a product review, and the other is a product feature. Now, a product feature, if you have a great product, send it over to us, producer@foodabletv.com, and it is a paid placement, but we will give it an honest feature review. If it is a review, it's something that basically either I use or something that I've been around that I will give you guys as a tip. And obviously, building a website is a huge, huge factor in any one of your businesses, whether you're a startup business. There's a ton of plugins for this product, which is Squarespace. And I know you've probably heard of Squarespace, but I just want to kind of reiterate the power of what this product can do. Because a lot of people don't really understand the flexibility of Squarespace. In many cases, they'll go in, they build it almost like a brochure site, which is great. But the fact that Squarespace is always developing on the platform means that as new things come out, I remember when Squarespace became mobile responsive, that was a factor that a lot of people were having to put huge dollars into their business website to be able to get it to mobile responsive. That's being developed on an ongoing basis with Squarespace. So it's a huge ability there. The other thing is e-commerce ready, and this is tying into technical aspects of payment and merchant systems like Stripe. If you're not aware of Stripe, you should be utilizing Stripe as your back end. It's a great tool that ties directly into Squarespace. Plug-in ready. Let's say that you have a membership program. Those are already out there in terms of doing membership programs that can be plugged in right to the Squarespace product. If you look at Squarespace and say something like Kajabi, which is a membership type delivery system for coursework, much like what we do, you could literally have a Kajabi product inside the Squarespace platform. And I think a lot of times there's so many other products out there, and again, so many people don't utilize the full power. It's like Excel almost. When most people use a spreadsheet, they use it for really basic elements. The reality is Excel is massively powerful. Same thing here with Squarespace. The other thing is, I think that even though Wix is a great product, and I've seen some good stuff from Bento, Squarespace is still killing it in terms of their overall design themes and their functionality of look. So as you see here, award-winning designs. If you haven't already looked at Squarespace and all the number of templates that can go on there, listen, we're right there up and open. We run foodabletv.com on Squarespace. And when you look at what we do, one of the things that I get more than anything in terms of comments from our clients or our readers or our viewers is they love our website. They're just in love with the look and the feel. This is one of the reasons, and that is award-winning designs. The other thing is blogging tools. If you are not blogging on your website, and that means content creation, so whether you're doing a podcast, you're doing a video, or you're just writing something in terms of how-tos or guides in your business, that is a great tool, and of course, it's built right in. And blogging tools are one of the most difficult things because a CMS, content management system, in many cases, whether you're using something like WordPress, and listen, I was a WordPress user for many years, and the great thing about WordPress, and it is developing, WordPress is a great product, but you constantly have to be developing on it, and you constantly have to be updating it to be able to have a masterful CMS. And that's where Squarespace really kind of jumps in terms of the tools, blogging tools being one of them. And I love the fact that inside their blogging tools, they've got the ability to do some very interesting things in terms of advanced recognition on when to post, also being able to do drafts. So if you get a lot of writers or a lot of people involved in the creative aspect of your business, everybody can be involved, and then you can have one person that's involved or kind of in charge of getting your content out there. SEO is the other factor that I think a lot of people miss in terms of their website. So whether you are doing a WordPress site, a Wix site, a Bento site, or a Squarespace site, I will wager, and I'd almost bet, that Squarespace, their SEO tools are probably the most powerful I have seen in terms of being able to get discovery on Google search. And that is something that every business is going to need on an ongoing, and it is a must-have when you look at tools for your website. So SEO tools all built in and ready to go. And then you get into the analytics, and the analytics are something that I think people also fall away from. Sure, Google Analytics is out there and it's a super powerful product, but a lot of people don't understand how to build up a Google Analytics system. And it can be a little bit complex and a little bit intimidating. But if you look at what you're doing with a Squarespace, it literally is right there in the CMS tab. It's an easy, advanced way for you to look at your traffic, your referral engines, your date ranges, as well as your traffic spikes and falls. And it can give you a lot of feedback. The cool thing I like about analytics is this has a mobile function that is an app on your phone. So you can literally be looking at your site traffic hour by hour rather than having your desktop system required to open this up. That's something that, even though you can do that with Google Analytics, it's also very tough. Because of the setup required to be able to get a really good Google Analytics system together. We do Google Analytics here, but I also look at the analytics via Squarespace, and it's kind of interesting to see the two. There are some variances between the two, so be aware of that. It is an interesting aspect, and I do think we are going to continue to see some very interesting advancements in Squarespace, especially around the areas of podcasts, because I think podcasts and RSS feeds are going to be a factor in the future on creating really usable websites and making it something that you can use on a day in, day out basis. So if you haven't started, maybe you've got a store, maybe you've got a service or a gallery, or you've got some kind of business that's very visual, this is the platform to do it with. Squarespace, check them out at squarespace.com. All right, so if you have not already, make sure and hit me up over on my website at paulbarrongroup.com. You can also email me at paul@pbg2 breakthrough.com if you have some ideas, or maybe you have a topic for Breakthrough. You want some insights. Maybe there's a potential for a consulting project right here on Breakthrough. If you do, hit me up over there. Also check me out on Twitter, which is just @Paul Barron. Thanks for watching Breakthrough. We'll catch you next time.